Hey Bridgemill, Tom Townsend here, coming back to you with our market assessment for July of 2024. If you've been watching these videos in the past few months, you know kind of what the routine is. This is going to be all the stats for Bridgemill subdivision that we just kind of like to review every single month just to kind of give you an idea of what's going on. One of the first things that we take a look at on our graph here, I always like to start with the average sale price in the subdivision itself. Now, this is over a 3-year period, and I also do a 3-month rolling averages to kind of take the peaks out of the assessment. So you can kind of see here in June, looks like we came down a little bit as far as the average sale price from our May peak of 745. So it just kind of came down just a little bit below that, but not anything significant. I guess the most significant thing is this big peak that you see that actually started in the beginning of the year and just is gradually, not even gradually, just absolutely spiked through the roof. So don't know how long that's going to last or not. But basically what this means is that the higher price point homes in our subdivision are probably ones that are hitting the market and actually selling. The median price properties in the subdivision or the cottages, probably not so much. So one of the other things that I would like to really focus on in order to determine appreciation is actually the price per square foot. That gives us a better idea on the actual value increases or appreciation that we may be recognizing with our homes. So this is very misleading. If you're just taking a look at this and going, wow, look at how much my house has already increased, this is very misleading because we have such a wide range of property values in the subdivision. So let's jump down here to the price per square foot and kind of see where we're at. As you can see, starting in right after the pandemic, it just spiked big time. That's where we saw that huge appreciation over the last couple years. You know, you had double-digit appreciation for multiple years, starting in about 2019, 2020, 21, 22. We just saw all kinds of crazy appreciation. Once the rates adjusted, you can see how it's just it started to come back down. This is after the rates increased, right? And then it spiked back up for a little bit. I'm not really quite sure what might have caused that. But then it's just kind of gradually come up, and now it's starting to kind of plateau. It takes years for things to pan out with real estate. It is a market segment. Real estate is a market segment that just doesn't move very quickly. It just doesn't. So the effect of the higher rates, it can take some time to actually work its way through the market, and you're starting to see that. So the price per square foot's been kind of hanging in there, as you can see, for probably the last 6 months or so, maybe a year, right? About 185, between 185 and maybe 200, it kind of pushes at about 200 square foot. We were up there a little bit higher, but about 185 right now is where I would say that we're at. So that's the median price per square foot. Gives you a much better picture of the value increases that you may be recognized with your property. It's the best mechanism that we have with this data set that I'm actually taking a look at. So I guess the thing that I would draw out of this is that the appreciation is still there. We're still seeing appreciation, which is a good thing. However, it's not crazy double digits like we had in the past years, which is always a good thing. So the other thing that we like to look at is this an active market? You know, are things actually selling, or are there no homes coming on the market and nothing being sold, or just very few? So we'd like to look at homes closed sales. So this is the actual closed sales. Again, you can see back in 2021, 2022, we had huge, robust summer months in the subdivision. And then once those rates started to take into effect, you can see the slowdown of the market as a whole. And last year was a slower year. You can see the volume of closed sales month per month is just way down. And this year is almost mirroring what we had last year, just slower, but it's not shut off. There's still buyers out there. Homes are still being sold. So that's the great news. So now what we take a look at is How many homes do we have on the market? Are there new homes coming on the market? We've all probably heard, inventory, there's no inventory. And that's true. We've got an inventory issue. A lot of people are having a hard time putting their houses on the market especially if they have a lien on it and they have an existing loan that's, like in the 3% range, right? It's very, very difficult. Cash buyers, that's great. You don't have to worry about that. But it has been an issue with inventory. So let's take a look at what new sales that are hitting the market. This is the number of new properties that are hitting the market month per month. And as you can see, oops, what did I do there? I don't want to do that. Oop, okay, try and get rid of that a little bit. As you can kind of see, in 21, 22, we had quite a few homes that actually hit the markets, especially during those summer months. And then last year, not so much. And then, of course, this year is even worse. So we've just got very few homes that are hitting the market. But if you look at the ratio with the number of homes that are hitting the market and then kind of go back to the closed sales, you can see that the homes that are hitting the market are being absorbed by buyers. So the absorption rate is actually pretty dang good here in Bridgemill if you're a seller. And the way that we look at that absorption rate sometimes, this is a good indicator, is the months of supply. This will tell you how many months of supply of homes that you have on the market at any particular time. It has been said that the balanced market is 6 months. We haven't seen 6 months for years. So the fact that we're at 2 months is actually pretty good. It's still a very strong seller's market. This indicates to us that we are still in short supply of inventory or homes, and we don't see any quick fix to this. So this is going to be hanging in there. This is going to be a problem for a while. So, okay, here's July. Here are the bullet points. Rates are still, right around that 7%, 7.1. I guess the feds came out not too long ago and hinted to the fact that they may reduce rates down. I will tell you that any kind of news about rates will hit the market immediately. The market does not wait for the actual decrease. So it's very speculative. So any kind of rate reduction is probably going to be recognized like right now. You're probably starting to see the rates come down a little bit, but there's not going to be this huge drastic decrease. I've heard many times that we will probably never see 4% again in our lifetime. Depending on your age, that could be the next 20, 30, 40 years. So I don't really know. No one can predict that. But anyways, just kind of food for thought. So rates are still high. It's still an active market. It's not as robust as it has been in years past. There's less inventory and there's less buyers out there. And the buyers that are out there, it's expensive because of the rates and because of some of the other expenses that they have associated with it. So they're very, very selective, they're very picky, and they're very cash conscious. So if you are a seller, really work with your agent. If you have to sell or you want to sell, make sure you've got an agent that really is fine-tuned with their marketing. Your home is going to have to be in really good condition. You can't just throw a sign in the front and not do anything to the home. Today's buyers are fairly selective and fairly picky. They don't have a lot of cash walking into your property, so make sure everything is done and ready for them to walk into, and because they just don't have the cash to be able to replace a bunch of stuff and update it. So, but anyways, that's what's going on in July right here in Bridgemill. Obviously, I'd like to have a further conversation with you if you got any questions. Hope everybody's doing well, and we'll keep you posted. Thanks.